like, that's when I got the bug. And I was like, man, like, this is awesome. Like, I'm going to figure out how to do this. And it took a couple years. Like, it took me 3 years before I actually started to make money. So learn as much as you can. And like, it's okay to make mistakes. Keep them small, trade small. Cause like, if it takes you 2 or 3 years, like there will be another hot market after this one comes to an end. And like, it's a long-term game. Sykes says it all the time. And it truly is. Like, you can't go in your first week, your first month, your first 6 months and expect to be making thousands of dollars a day. That's just not how anything in life works. You bet.
This group of people right here are like, these are the guys, you know, since day one, everyone in
The
this
boys.
room.
Record all of this, Matt. Record it all. Show us in our natural states. Jack with his Disney balloons.
Still there.
Go there.
With his blue mic. Is that a blue mic?
It is.
Yeah, that's cool. How you been?
Yeah,
Dom?
it is.
You doing good?
Yeah, I'm doing good. Just living life.
I mean, you passed over $1 million. You pretty happy?
Yeah, I guess so. I don't feel any different.
I asked Matt when he passed $1 million today. I was like, "Do you feel different?" He's like, "You know, if you include my crypto gains, I was over last week."
That was my response.
Nah, that's cool. It's, you know, it's not an exact science. It's more just, you know.
Where are you, in a closet, Monaco? Where's Sykes
That's
Trading?
Keely's room.
Huh?
Matt's in the closet.
That's Kyle's room.
It looks like a little sauna.
No, it's like legit. There's like a couch. Nicole's over there.
Oh,
All he needs is a couch, ladies and gentlemen. That's what it takes.
How much was that couch, Matt?
I don't know. This is I'm a Sykes. I'm upstairs.
This is an Airbnb. that
Yeah.
we're at.
I thought you would just know off the top of your head, though.
No, I'm not that big of a
With your
connoisseur.
couch experience.
Wait, let me open this. Where are we? Too many webinar things. What the fuck is this called? Oh, the challenge. Okay, that makes sense. Let's try this. Let's see if this works.
Who's long SHMP?
I am. What'd they do?
Nothing, just all of us.
I mean, it's a perfect chart. You got to respect the perfect chart. So,
but
when
who
you
has
have
the
a
most amount of shares?
Oh, this guy, right? He's in the
little over
bottom, my bottom
100,000
left.
shares. Do I have, is
My
that a
bottom
lot?
left, if it's the same for you guys.
I think it's either Dom or Jack.
The only guy wearing, yeah, neither, yeah, no, Huddie has a hat. I was gonna say the two guys with hats on.
Biggest kicker he's ever had. So
Can you guys hear me? Let's see, because we're live in the challenge thing. We'll see. We'll see if this works. Have we ever done like a live twist / Q&A? Is this an innovation?
This is
Something-
the
Resolve right now.
Yeah.
Is this gonna work or no? Let's
Well, the
see.
challenge students might not be able to hear us.
Are people actually hearing us right now?
I mean, I don't
We
see
live.
why they wouldn't. Why not?
KOS has hit 90.
Actually, they might, if the speaker
90?
off of your laptop goes into your,
Wait,
speaker goes
say-
in your microphone on your laptop.
Say good or bad in the challenge chat if you can hear everybody. This will all be recorded, so if you miss anything, you know, we can watch it later. But we're trying an innovation here with merging Twist, merging challenge webinars. All 6 people on this challenge webinar, FYI, we are millionaires.
He mute himself? Okay.
I
can't
always
even hear
have to
him.
mute myself when Sykes screams.
Nice.
I just go.
I
mute
do
him
it.
with the volume.
I do it just to practice. I hope you guys understand. That's how I've gotten good at this, because every time I do it, I get a little better. You know, just like Dom. Dom is a big screamer in secret. He just doesn't like to do it publicly. But this is the big announcement. This is why I wanted to do this, because Matt Monaco crossed $1 million today. Huddie is around $1 million. He still doesn't want to look exactly to mess up his trades, which I understand. Kyle passed $1 million yesterday. Jack passed, $1 million. 3 months ago. Now he's over 3 million, which is insane. Congrats on that. And Dom passed $1 million either yesterday or today, which is awesome. So everyone's heading in the right direction. it's pretty freaking sweet. And I love this. You know, this is kind of what I envisioned years ago. I didn't know it was, you know, how it was going to happen with all these, you know, hot stocks. And everyone pretty much hitting it like within days and weeks of each other, but it's pretty sweet. So,
and you know what's really cool? Us 5 kids, we were all hanging out at your conference, you know, when we were all nobodies, just like shooting stuff and hanging out, and we all just kind of came together and made it all happen pretty much at the same time, doing the same things. And
I mean, it's whoever takes it seriously and starts to realize that, you know, this is a process that you still have to learn. I mean, you know, to all your guys' credit, like I hype up the millionaire like milestone. All of you guys are like, it's just another day. Like, I don't feel any different, except Huddie, who got like a brand new P. Diddy-esque suit. So,
and a Porsche to go with it.
Yo, whatever works, you know, celebrate however you want. Just stay humble, because we don't know how long this market is going to last, how long this craziness is going to last. We're going to take some questions in a second, but if you guys can just go one by one for a sec and, you know, just talk about, you know, what you've been doing for the past few days, past few weeks, what's your mindset, and throw out, you know, your daily profits or weekly profits just to inspire people, because, you know, we got to remember 90% plus of traders lose. Most people, they just need to see like, what is the path forward? What's a way to profit? Not that any 2 traders are exactly alike, but that, you know, there is a way forward if you're really meticulous. So you start, Matt, you're the man of the honor. Our, you know, passing $1 million today. Pretty sweet.
Yeah, so I was actually looking at like my stats, and I lost money last January, so January 2020, before kind of my big run. But yeah, today was the day. Like, it happened way faster than I thought it was gonna. I've been on the last like week or two, just a huge run. I've had the last 3 days, 4 days, I've made over 30K each day, which is a big reason why it happened so fast. Mostly trading OTC stocks, which that market's been crazy hot between breakouts, dip buys, but today kind of shifted over to listed land. Started seeing that a little bit towards the close yesterday with like AMC and GME, and there's just madness over there. It's just pure insanity. So traded NAKD a bit today, and also got quite a few OTC dip buys. But those have been my focus. I mean, just like, the easiest way to explain it, like your penny stock framework, like I'm buying the breakouts on the way up, and then as they crash, I don't usually short them, but I'll be scooping up the dips. And the amount of OTC runners we've had, like there's been 5+ trades a day in that market, and it's just those singles add up over and over and over again, and there's just so many plays that the P&L has been rather large lately. So
cool, good stuff. Keep it up. Huddie, how you been doing?
Really good. A friend of mine went to Get In Where You Fit In. I think that was like Dom's quote at one point. And for a while, I was a short seller. You know, I just shorted first red days, and that's all I did. And then we had this insane OTC market that just came out of nowhere, I think around Thanksgiving. And so I started talking to Dom again, and he really helped me out, figure out like how to take advantage of the risk reward within OTCs, where, you know, you can risk half a penny, make 10, 20 cents. And then as it starts setting up new levels and consolidating sideways, you can really layer into that, you know, winner and get your size to a situation where, you know, you blow any kind of loser out of the park. And that's what we've been doing for the past 2 months. So I'm having a record week for myself. Monday, I had my best day. Tuesday, I beat that best day. And then today I just kind of added on to it with some of that EXPR overnight, just long. And up $100,000 on the week, and that's the best week for me I've ever had. It's pretty freaking cool. And a lot of it's longs. You know, there have been a couple shorts here and there. The fees have been outrageous. It's not really worth it, as Jack keeps telling me. Focus on, you know, pretty much YOLO buying the dip and making sure that you're focusing on the long, because again, that's where the opportunity has been and it continues to be. And it took me a long time to figure it out. It took me this market to figure it out, and I'm so glad I did.
Cool. Good work, man. You gonna get a haircut now?
When the barbershop reopens.
Just get a Flowbee. I don't know if you saw it. George Clooney did an interview, and he's like, yeah, I've been using a Flowbee for like decades.
What's a
like
Flowbee? It sounds weird.
You don't know what a Flowbee is? It like sucks your hair out. It's like a vacuum.
You should come out to Scottsdale and just cut it for me and film it.
I really don't like the West Coast. I'm sorry. I like sleep.
Yeah, I get that.
Kyle, how's your week going?
Really good. Same, similar to what Huddie was saying. Being a short seller, this month of short selling has been quite painful. I'm profitable, but the amount of energy and work is so much more. And so shorting, thankfully, or not shorting, longing, thankfully, has been incredible in this market, specifically with OTCs. I mean, also NASDAQs, even though I'm not good at longing NASDAQs. I mean, this morning I watched like all OTCs, and then after the first hour, all the OTCs like were gone. It was all NASDAQs, today's an insane day. But the liquidity, I think, is what allows me to really take advantage of some of these like listed, or some of these OTCs. So for like when I first started trading, OTC dip buys were my setup. There's a lot of good ones, but there's a lot of ones that just weren't really that liquid as well. But in this market, I mean, I'm not even a fraction of a percent of the volume. Like I'm so small, but I'm like getting huge size and taking bigger risks because I think it's worth it. And like OZSC, the AITX, but now there's another one. I mean, SNPW, like all these are just beautiful, beautiful, like liquid OTCs that have really allowed me to push it. My E-Trade account has been like the fastest growing account to over 6 figures. It's out of all my accounts. Longing's in. Shorting's really tough, but until this market calms down, I have no idea what's going to change or how it's going to change. But this can't last forever, so we'll see.
Did you see ENZC this morning? I totally missed it.
That one bugged me. I put it on my watch list last night, but there's so many things running. I don't have enough charts, and so I thought I'd look at ENZC like later in the day, and it was too late. Yeah. Perfect.
I'm not bitter. It's okay. I still made 15K on the day. What'd you make on the day?
Like 20, 22, 23, somewhere around there.
Pretty sweet. Congrats.
Yeah.
Jack, how'd you do?
Today, or you want me to talk about overall?
Talk about whatever you like. Talk about your Disney balloons in the background.
Well, my lovely girlfriend got me those, but other than that, it's just been absolutely incredible. Pretty much since Thanksgiving, I hadn't had a 6-figure week, and now I've had every single week been 6 figures since Thanksgiving, and now I've been pushing like quadruple and triple 6-figure weeks, and pretty much having 6-figure days the last couple of weeks. And it really just all comes down to being prepared for this market. I would say out of all the traders here, I've probably spent the most time talking to each and every single one of them. And I think that's what really propelled me. Like I've learned so much from Kyle, so much from Dom, so much from Huddie. Matt, probably the least, but Matt is the hardest worker probably out here. And it's just crazy. Like this is what we dreamed of in 2019. Like we wanted this market and we finally got it. So I didn't want any regrets. I didn't want to be, a few years later being like, oh, why didn't I go bigger? Why didn't I try harder? So as long as I come in every single day and try my best, that's all I can ask for, and that's all I can do. And that's my mission every single day. So that's how I've gotten here. Extremely grateful for everything. As Kyle noted, like shorting is absolutely terrible. Whenever I place a short trade, like it's just usually pain and so much fatigue and just wastes so much energy out of me. Going long has been far superior. And really, like Sykes has been saying it since the beginning, like go long, go long. And I've talked to a few more traders too. And it's just, I really started to understand the upside potential going long. With shorting, you have to take a ton of risk. You have to use a lot of fees. And like the way this is working, like people just keep buying. And shorts are just getting absolutely clobbered. Like you can see GME, hedge funds blowing up on it. Not a good time to be a short seller. But other than that, what did I want to know? Oh, VPER, I sold that today at a cent from dub 1-1. It was like 1,000% gain, and that was just like a pure example of just how insane going long is. Like it really opens up my mind. Put $2,500 into the stock, made like 24,000. And it's just absolutely insane. Like it's not even about the money that I made on VPER, but it's really just about opening your mind to the potential on the long side. And Dom has helped me at the beginning. He helped me with learning the turns and learning how to use risk management, how to build into a big position. And Kyle taught me about shorting, and Huddie really helped the textbook part of it with Tim Gertani and just thinking that textbook ideal risk levels, daily charts, all that kind of good stuff. And Monaco taught me that work ethic. So we're just going every single day till it slows down. I don't know what to expect.
Did I teach you anything?
You formed the everything, you know what I mean? But no, you taught me a ton too. Like I wouldn't be here without you, you know what I mean?
I know I'm messing with you. One thing I will note with the longing versus shorting, there still are every now and then some good shorts. You know, you guys nailed WNDW. And as this stuff goes higher and higher, you know, long should get more and more scared. Like it's not cool to chase, you know, GME here in the, I don't know what, 300s or whatever. With the mentality that you don't want to short, sometimes the optimal shorts will find you. So you're not looking to short, but if a play goes up just too much and then it starts cracking, you're like, I have to come out of retirement. So the same kind of retired trader mindset that I like, where it's like, I don't want to make another trade unless there's a perfect setup. Utilize that for shorting, because we are going to have some pretty amazing shorts coming up in the next few days, in the next few weeks. And it's not like you should never short. You just have to really be extra selective on when to do it. I just want to be clear about that, because when the market turns, as it inevitably will, I mean, this is speculation frenzy to the max. I think there will be some good shorts. So I don't want people thinking like, oh, you should never short. You said this on January 27th. A trader should always adapt. And I'm glad to be long, you know, 100% dead on with less stress, less risk, less fatigue. But with all these giant short squeeze, some opportunities I think will come up in the next few weeks. So just
yeah,
wanted to get that
totally.
out.
And I think that's the correct mindset with shorting. Like just don't look for a short trade until it's just completely obvious. Or when the market does shift, these things are probably going to fade out a lot more than expected. So it's just a mindset shift. And that is what Sykes has taught me, is the mindset you need. Like I traded on the phone with Sykes last week, and just having him there as in like overall guidance on having the correct mindset throughout the entire trading day is like, you got to keep that mindset clean to make the best logical decisions day in and day out.
Dom, last but not least, tell us what you've been up to. Some people
I've just
thought you
kinda
were
been-
dead. Some people thought Jack killed you. I don't know where they came up with this.
Yeah, I don't know where they heard that either.
Crazy.
I've just been taking it day by day. Since Thanksgiving, I kind of committed to start sizing up. I'd been risking like $200 or $300 for like the first 3.5 years of my career. I just was comfortable with that number. And then I kind of saw Jack taking off like at warp speed. And I was like, maybe I need to start sizing into the patterns I know best a little more and start making more money on my trades. And that kind of coincided with this crazy market starting. And the main thing I've been doing is just focusing on 3 or 4 plays throughout a whole day. I mean, there's so much noise out there right now that it's easy to kind of get lost in it and just like get scalpy and not take advantage of the big moves. So I find if I'm focused from the start of the day on a few setups, that I can get more size on those, take bigger meat of the move and make more money. And then really just being in tune with the market and realizing what's hot, like understanding the big picture behind the plays and the patterns. Like, I mean, every few days a different sector is running, whether it be like energy or marijuana, and then the subsets of that being like low price, like sub pennies, or 1 cent to 10 cent ranges, or like price ranges. And there's just been something different every week that you kind of have to stay up to date with, because if you can focus on those, find the laggers in those industries, you can get ahead of the move a lot quicker and make a lot more money and have those bigger moves like Jack was saying, like 1,000%. But yeah, just taking it day by day. I'm having a record week. Yesterday I passed $1 million and had my first 6-figure day. So it was pretty cool. But yeah, just not getting too caught up in the numbers or anything, and just trying to milk this for all that it's worth and just get good habits going for the future, so that way I can succeed in all markets.
No, I like that. I like that with, you know, I mean, this is how I've been dividing up my watch list every day by price range. You know, some days like today, you know, all the low price OTCs just got clobbered. Yesterday, it's like they couldn't stop going up. And earlier in the week, they couldn't stop going up. I think that we're going to continue to see these shifts, although, I am long SHMP overnight because it's just too beautiful intraday and multi-week breakout on a former runner. I love that NAKD, is running. I love that SNDL was running. Like all these former runners, GNUS is running. I am a huge fan of like Wall Street bets and the mob mentality because it just gets things going. It's all volatility, and then you get sympathy plays off the leaders. Please, I see everyone congratulating Dom. Congratulate Dom, Huddie, Matt, Jack, Kyle. All these guys are just crushing it. And, this is the right mentality to try to take it day by day. Do the best that you can. Don't worry if you mess up on any trade or any one day, you're going to have another opportunity. In the past, it would really sting for a while because you would like miss a perfect dip buy or miss a perfect short. And then it might be days, weeks, or months until there was another perfect setup. Now it's like a few minutes or a few hours. So there's lots of time to learn and not just, make a lot of money. But I did want to, highlight these guys to show you what, years of study has been paying off. Like none of these guys are, starting right now. I saw in the chat room, Griff in challenge chat, he's over 2 million. He had a $122,000 day. It looks like he swung NAKD pretty well. It's awesome. So whether you like the OTCs or the NASDAQs, dip buying, morning panics, buying breakouts, you find what pattern works best for you. You try that. I highly encourage you to try other strategies right now. This is like the market to really experiment, whether you want to try a new strategy with 100 shares or paper trade, but you can start to really increase the speed at which you can learn in markets like this. So every single day, I don't care what you have to do, try to get as much screen time, especially near the market open and near the market close, just so you can witness it. Even if you miss your execution, even if you get a partial execution, even if you want to short a stock and there's no shares to short, at least witness it and see that, because then next time it happens, you'll be like, I remember what that looked like. Like these stocks have specific characteristics. And throw out any questions in challenge chat. We'll take some questions too. I wanted everyone to do like a little Q&A to see if this works. But it's awesome. Like I'm so proud of all of you guys, and I'm excited to see what more you can do. Everyone has like the right mindset of staying humble and taking it one trade at a time. It's not like any of us are going all in or using too much size except Jack. So everyone is cool except Jack. Now I'm kidding. Jack has been taking some size, but he's also been preparing a lot, and he's got the Disney balloons behind him for luck. So I think he's okay. Let's see. First question. Congrats, Dom. When are you going to do a video lesson on the now famous OT Swizzle?
I think there's a whole podcast or something with Beyond the PDT on it.
No, we want you specifically. We want the Dom Swizzle.
The OT Swizzle? Yeah.
Can you do one?
I can do that. Yeah.
Whenever you can, like over the weekend, send it to me. We'll get it posted, whether it's 5, 10, 15 minutes. This is what I love too. These guys don't have to share what they've learned. This is what I love about our community, where it's not just about the money. Like we all like hang out, with each other, except for Dom. And it's pretty amazing. Like we all like just chill, and except for Dom. So we're good with that. Dom, will you come chill with us? I know you like to be off on your own. You're like the ranger, but even what's his name in Lord of the Rings 3, he comes back and he takes his rightful place as king.
To be fair, I was just with Dom for the whole week of the first week of January. We were hanging out, golfing every day, still making money.
I'm just saying, no, he doesn't hang out with me. I'm like, forget about anybody else. I'm just saying with me.
It's a personal call.
This is all about me. This is my Q&A webinar, Huddie. I'm sorry.
Right.
I understand you guys play golf together and you shoot guns. I get it. But that's not me. I don't like to play golf. I don't like to shoot guns. That's just me.
We can hang out, Tim.
All right, cool. Thank you. Let's see. Question, whoever wants to answer this, how does options affect stock prices?
No idea. I don't have any clue.
No one wants to answer that?
I think this is a question for Matthew Monaco.
Yeah, he knows the most.
Mm-hmm.
What's the question?
How do options affect stock prices?
I don't know exactly. But isn't it more like the other way around? Like stock prices affect options?
Listen, I'll tell you when the options start to heat up. I don't trade options. I'm not a big fan of them. I think it's tough to really, cut losses quickly. Mark Crook has been nailing it with his option strategy. But when, KOSS starts spiking, NOK, Nokia starts spiking, GME starts spiking, a lot of the people are not trading the actual stock. They're trading options in the stock. And before the stocks really start running, there's a lot of activity in the options because that's, people betting on future volatility. And when they bet on future volatility, that oftentimes makes the stocks more volatile and it becomes kind of a self-fulfilling prophecy. And now we're having like giant short squeezes. I mean, you have to keep things in perspective with GME. Some of the biggest hedge funds in the world, some of the smartest traders in the world have lost billions in the past few days. Okay. Melvin Capital, I mean, we don't know their exact loss, but they had to be bailed out 2.75 billion by Citadel and Steve Cohen. That was when GME was at like 100. Now GME's at like 300. I don't think they're bailed out completely, or actually I saw a headline saying that they got out completely yesterday, like in the hundreds. I mean, this is crazy how much people are losing who are big time in this industry and they have decades of experience and billions of dollars. And so now people say this. Actually, this is my question. What do you guys think about this trend that's become like hot in the press? I'll save my opinion until afterwards, but like, are retail traders taking over? Like Robinhood, I always made fun of Robinhood in the past because, if you actually have a Robinhood account, they're farming out your orders to Citadel. Citadel has a choice whether to, front run your trades or not. So it's actually like basically like stealing from the poor and giving to the rich, which is against everything that Robinhood stands for. But now these Redditors have found out a way to like kind of squeeze the big hedge funds. And now Robinhood is fulfilling the prophecy where like the poor people are taking from the rich. What do you guys think?
The dumb money is the new smart money.
That's short and sweet. I think it's awesome that so many people are getting into it, but it's a very dangerous game the way they're doing it. So
yeah, I'm conflicted by it because yeah, it's awesome. Like I love retail making more money. Like that's great. That's cool. Like that's sick. But right, they don't. Unfortunately, like they're called dumb money because they don't. A lot of people unfortunately don't understand the game they're playing, which is why like there's rumors of like SEC halting GME, and it's like why would you halt the stock just because like the retail's making money? You're gonna, and the hedge funds are getting screwed. Now you're gonna halt it when on your favor. But it's like people really don't understand how the people who stick around and don't understand what's coming, like they're going to lose money. So like there's a level of protection that isn't there. So that worries me because right, this doesn't last. So that the fact that's going on is awesome. Like great, make as much money as you can. But when it ends, like there's going to be people who are going to be hurting. So I'm conflicted with it.
What do you think, Dom? Big talker?
I agree with everything Kyle said. I mean, I love that it brings a ton of volume into the market, and you can just tell by text you get from people you haven't talked to in forever, like about stocks and should I buy this? Well, did you get any piece of this move? And that there's so many more people in the game than there was a year or two ago. And I think that's cool. It's fun for us, but I do think it's going to come to an end at some point, at least for a little while, when they begin to get hammered for all the terrible habits that they're learning.
Yeah, I agree with that specifically because a lot of people are making a lot of money with the wrong attitude, the wrong mindset, going all in, using leverage, betting on, parabolic moves, not selling. People are being rewarded right now if you are undisciplined. Like those of us who are taking small profits, like I see some of the tweets, they're like, Sykes, you take these 10, 15% profits, I'm up 2,000%, you suck. And I'm like, I mean, I appreciate that they're up so much. I appreciate that, yeah, I probably should push it a little bit more, but I'm staying disciplined. And when the market flips, when the market turns, I'm going to stay safe and they're going to get annihilated. So I really think it's not just about how much money you can make as quickly as possible. It's practicing the good habits and making a good amount. Obviously that, that's what you want to do, but doing it in a safe, disciplined way. If you just go all in, if you use leverage, again, right now you're being rewarded. You keep doing that in other markets, you'll lose everything and more. There's some like crypto bears and they're like, let Bitcoin go up as much as possible. It's all going to crash in the end. And most crypto people will hold till zero. No different than how a lot of these, pumps people believe in them and they hold till zero and they go down with the ship and then they wonder what happened. So I can't encourage you guys enough listening. Sell into strength, take some off along the way, even if you sell in like 1/5 increments or 1/3 increments, but just be safe. Let's see. Question. How would you approach this market if you were new to trading with the same amount of money that you guys all started with back when you first started? Good question.
Do like that.
What's up?
I'd probably lose money.
I would say watch and learn, because I mean, if I was in this market environment right now with $6,000, I mean, one, I don't know, I have no idea what I'm doing, and I'd be scared, and for good reason. I think that would protect me, because like, again, I would have no, I mean, around the same time as when dries went to 100, right? I only had like a $4,000 or $6,000 account at that time. And I was just watching these things go bananas. And I was like scared. I was like, I have no idea what's going on. And I'm not going to try to figure it out. I'm going to just learn as I go. And the next time that happens, that would be when I can actually put any practices or experience into place. The last thing I would want to do would be to YOLO long, like GME at 300 here. You got to preserve your capital in the beginning, because if you lose it, you're done. You're out of the game. So.
And to go off what Kyle just said, I think it's so important to focus on the patterns, the tried and proven patterns that we all trade, like shrimp, like SHMP. It has nothing to do with AMC. It has nothing to do with GME. It's just in the OTC market that's hot, but it's a beautiful pattern that we've all traded 100,000 times. We know what to expect. And we're not just like YOLOing AMC and GME and the rest of them that are just running today because they're up. And I can imagine so many people in the challenge chat right now that are just stabbing at these, massive runners because they want a piece of the action. And they think that's where the money is made. And in reality, that's not where we're making our money. I mean, I don't think anyone in this room really traded GME, AMC. Maybe some of us had EXPR.
Jack. Oh, sorry, Jack.
But just stick to the patterns, like that's the most important thing. Like, I know it can be boring. I know that like most people don't want to do that. You just want to get into whatever's like moving up, and that's not how you're going to make money. That's not how you're going to build consistency, and that's not how you're going to make it, 5 years down the line to be a millionaire in this chat.
Yeah, no, I had a couple dabbles on AMC, and I had EXPR, whatever overnight. And that's only just because my account is a lot bigger now, and I can afford to just try something new and kind of trade around this insane volatility. But this isn't something where I'm going to bet half my account or bet even 2% of my account on some of these stocks. Like, this is so out of my territory. This has so much volume. This has so many big players in it. Like, what Sykes teaches is penny stocks. Classic. We were trading. I'm sure a lot of people were trading. Kyle was trading. Sykes was trading. I was trading at REOS. A couple of weeks ago, it went from like 0.002 to like 40 cents, and we were trading it. And Sykes is like, this is exactly what penny stocking is. Like, this is penny stocking. And that is really what it was. Like, we look for these penny stocks. We look for breakouts, dip buys, first red days. Like, we're not doing anything special here. We're just following what we're taught to believe. I'm a big believer in the penny stocking framework, the number 1 through the number 7. I live and die by these patterns. And those are the patterns that I'm sizing into. And it all depends based on the market condition, the liquidity. And that's what I look for. So as a bigger trader, and if I could go back, like, I would still just focus on those patterns. I would try to avoid the sectors as much as I could, like, because the sectors have a lot of risk overnight, like AMC and GME and these new bankrupt plays. Like, they have a lot of risk overnight, whereas the daily breakouts, the panic dip buys, the first red days, like, they're your best bet. And that's where I would start.
Good stuff. You have anything to add, Dom?
If I'm, I
If
would
you
just
must.
stay. I would just stay in my lane. Get in where you fit in, right, Huddie? I mean, to some degree, we're doing the same thing. Like, GME and AMC are out of my comfort zone, out of my skill level, and I've been doing this for 4 years. Like, you just have to know what you're good at. And at the beginning, you might not know what you're good at, but you know what you're studying. And I would do what Huddie said: stick to the patterns, the plays that you're actually learning. create a watch list every day and try to stay to it as much as possible and just test your patterns out in this particular market. But the more you go out looking at new things, following Twitter ideas, looking at everyone else's watch list, the more tickers you have right now, I feel like it just complicates things as a beginner and you don't get any sort of consistency. And if you can take this hot market and just get like some traction from it, you don't need to go and have, you know, great months and have like a great stretch. You just need to get some consistency out of it.
Yeah. And I would say, you know, you guys are going to learn how to trade differently with different account sizes. Like when you have a small account, you know, and you're under the PDT rule, like you're not going to try to make, you know, 5 trades in a day or 50 trades in a day. You're looking for like the one best trade. Maybe it's an intraday trade, maybe it's an overnight trade, but just one. So you have to really like tune out all the noise and focus, stay in your lane. When you have a multi-million-dollar account later on, you can afford, you know, Jack has like 30 like swings where he's just trying different stuff. If you have a small account, you don't have time to look at 30 stocks. You don't have the account size. You don't have the experience. You don't have the skill set. So you have to learn that at different times in your trading career, you have different goals and different strategies. At first, if you're under the PDT rule, your sole focus should be to get out of the PDT rule. And you should do it the right way, not just like add money to your account, be like, oh, I'm out. I just wired in 15 grand. You know, picture yourself in prison and you have to try to escape. And how do you do that? A few hundred, a few $1,000s, you know, intraday or, you know, overnight. I saw some people saying like, would I hold, you know, ILUS up overnight? It's a first green day. But, you know, the thing finished up 952% today. I mean, I was pushing it a little bit, just buying the breakout when it was up 500% because I was like, well, this has similar price action to VDRM, which kept going. So I tried it at 1.4, out around 1.7. I was happy with, you know, my under $2,000 profit on that. And it finished at 2 cents. I was not going to chase it in the twos. I don't feel guilty selling too soon. I pushed it and I'm just glad that I even tested it and tried it. It's not my ideal kind of trade. A lot of these big runners that are up 500, 700, 1,000%, they have zero news. So that's not ideal for me. I like a good catalyst. SHMP, I am long overnight because it's not up a ridiculous percentage. First green day OTC, former runner, nice intraday breakout, nice multi-week breakout. So that fits my comfort level more. You have to find what you're comfortable with. And in the beginning, you know, like I said, tune out a lot of the noise. Like it's fun to talk about GME and KOSS, but if you're under the PDT rule, like, and you're just starting, like you shouldn't be trading GME. I don't care how much money you can make if you get lucky. Getting lucky is not a strategy. So watch KOSS if you want, watch GME if you want, but those stocks are literally blowing up multi-billion-dollar hedge funds. So you think that you have more skill, like more knowledge than a multi-billion-dollar hedge fund? The answer is no. A lot of these people are just gambling, and you really have to protect against gambling because even though you might make a little money, it might get your blood, you know, pumping a little bit. You're like, this is trading. It's going to hurt you down the road because gamblers never win in the end. And all these people who are thinking they're so good, Chris Sacca, one of the billionaire investors that I really respect, had a tweet a few weeks ago. And he's like, for anybody who got started stock trading in 2020 and you're doing well, you think you're good, you're not. You're just lucky. And that's really like the reality of the situation. A lot of people are making a lot of money, but they're doing it in the wrong way. They're getting lucky. This is the reason why we're able to show all of our trades and our real names, as opposed to like, you know, Pink Dragon 532 just made, you know, $1 million, even though it's probably a paper trade or like it's, you know, some offshore account. Like there's so many shady, sketchy people. And we're just proud to be real. Question for all OTC dip buyers. How do you guys identify fake turns even when the stock is already dipping a lot with a lot of volume? Great question. Who wants to take that?
I'll take it. The first thing that I always look for is how big is the market cap? Because if the market cap's bigger, there's more players involved. It means there's more competition and there's possibility for more fake turns. I look at the history of the stock. Has it had fake turns before? I look at if there's a catalyst on the news run. If there's a catalyst, there's probably going to be more dip buyers. If it's a pump and dump, it's likely just going to go down without any bounces. And I would say those are my top 3.
I would add the volume on the particular bounce. The bigger 1 minute candle, the volume exhaustion you see generally leads to less fake outs, but there are fake outs with that volume anyway. But just in terms of spotting the bottom in general, that volume exhaustion on that 1 minute is also an indicator I look for.
I'd
I
even
would
add
say,
how much is it?
oh, go Matt.
Oh, I was gonna say, how much is it down on the day? Like if it's still green on the day, you're probably gonna get some fake turns. If it's only down 10%, you're probably gonna get some fake turns. Once you start getting, 30, 40, 50%, like the turns become a lot more real.
Yeah, I was just gonna say, like the cleanliness of the panic. Like if it's like a morning panic, just went red, and panic's like 20%, like in a matter of like 10, 20, 30 minutes, like it's really clean and slow. It gets quicker towards the bottom and then sits at that level for like a full minute. You're most likely at the bottom. But if it's like you're buying panics like 3%, 4%, 5% down, you're gonna get caught in a lot more fake turns. But if you're going to keep yourself safe for the most part, if you're waiting for like the real big 15 to 25% like red on the day, and then like if it's actually a panic, like a lot of times we've been seeing lately is like they just trickle off, kind of bounce, not really trickle off. And the more they do that, the less likely they're going to have a good bounce anyway.
And I would mention, once a play is down, like a multi-day runner that's down 25, 30, 35% on the day, like near the market open in a hard panic like AITX had, OZSC had, ENZC had today. It's really tough for dip buyers not to come in because a lot of them, people like me, people like you, like we missed out on the runs. I was frankly surprised at how far OZSC, AITX, and SNPW and ENZC all went. So now you have this 35% off sale. That's a good time to dip buy because now, like theoretically, you can get in the same company at a discount price. I think I don't know if ENZC went green on the day. I know it bounced nearly 100%. I missed that one. But OZSC, huge bounce. AITX, huge bounce. SNPW, some plays just don't bounce. And what I was telling people is like I think some restricted shares became unrestricted, so they're just loading into every attempted bounce. Sometimes that happens. That's why you can never just say every play is necessarily going to bounce. SNPW was the strongest on the way up, and now it's the weakest on the way down. Maybe they have a PR tomorrow or the next day, and maybe they'll be stronger. But so far, no signs of sustainable bounces. And one question I saw earlier about AITX, I added to my position, even though it went a little lower. We've been seeing this lately where it's not necessarily like a one and done kind of panic and bounce. We've been seeing kind of like a double bottom, whether it's a little lower or a little higher, but you need that second bottom usually before any big bounce happens. And I'm glad I added on AITX. I had a profit. I didn't have enough patience to hold, for the giant bounce later on. So I did well on my entry. I did poorly on my exit. And that's how you have to judge trades. It's not just like good trade, bad trade. Judge your entry, judge your exit. What can you do better on everything? There are so many people on the internet where they're like, bought it here, alerted it here, nailed it here. But how did you exit? How did you plan it? Did you have risk controls? It's not just about your profit or loss. It's, did you have a plan? Did you stick to that plan? Was it a good plan? There's so many ways to slice and dice every single trade. And yet on social media, a lot of these people, they just look at like big profit, good trade, loss, bad trade. And so like when me or some of the students post like a small loss, like, how could you lose money on this? This is a terrible, terrible trade. But we're doing what's real and they're doing what's fake. So questions on NAKD and PAOG. What did PAOG finish at? I didn't even see. I should have looked. PAOG was a big runner, had a nice little morning spike, but didn't really finish that high. I'm happier just to be long SHMP, which finished, right at its highs. KOSS, wow, got up to 95 after hours. So it's fun for me to look at these levels. I'm not trading, but it is interesting. What do you guys think about NAKD right now?
Beautiful.
Just the epitome of what the entire day has been. Like, and so back to the question of like, are the retail traders taking over like, smart or institutional money? Maybe you guys have an answer for me. I don't understand where this liquidity is coming from. Like, there's so much volume that like, I couldn't possibly imagine that like retail traders have this kind of money. I know there's big players, but like, I'm blown away by how much liquidity and money is being thrown into like, not just one, like 30 stocks. I don't really need an answer for it, but I'm just like mind blown. So I'm like, I don't really know what to say about.
I think it's a combination of retail traders and then institutional investors who are just shorting, because retail traders have very short-term time horizons. I can picture a lot of institutions that are not melding capital, but that are seeing GME in the 200s and 300s and saying 6 months from now, there's no way that this thing is going to be up that much. So they're making longer-term short selling bets. That adds to the liquidity. The interesting thing is, how powerful is the red army? Can they then squeeze the longer-term shorts? And, I'm not sure GME is done. This is why I'm not trading it. I'm not like, this is definitely overvalued. When you have like this kind of just black swan event where no one really expected it to go this high, I just throw all options on the table, and I don't know where it goes. So I know that there are big hedge funds taking bigger stakes that are coming out of the woodwork they would normally never even short or never even trade. But when the opportunity presents itself, no different than what I was talking about before, where it's like, I'm not a short seller, but I'm proud to say, look, I haven't shorted anything in months because there's all these conspiracy theories that I'm like shorting all these plays, even though I'm not. But if there's a play that's good enough, I will come out of retirement. If GME goes to 500 or 700 and starts showing signs of downsize, I mean, I might short 1,000 shares and see how it goes. It's not out of the realm of possibility.
I'll be there.
That would be a day.
Maybe I'm just, I'll throw it out there. I'm trying to manifest it. Let's see. How do you manage multiple trades at the same time? OZSC, AITX, both panicked and bounced at the same time. You tried both, got faked out on both because there's too much to handle. And also ENZC was a perfect one, and CBBT also. There was actually too many panic dip buys all at once. How do you guys handle that, being overwhelmed?
Size into the best one and focus on that one, and take smaller size on the one that's not as ideal. And just practice and experience. Like if you don't have at least 100 trades on the specific pattern with proven stats that you're profitable over the long run with that specific pattern, you shouldn't be trying to throw multiple darts at the panic dip buys. Like this, you can only trade multiple patterns at the same time after you've done it for so long, you know what I mean? And like I tell everyone, like track all your trades based on the pattern that you're trading them with, and just track your panic dip buy performance and study, review, see what you're best at, see what you're worst at, and go from there.
Also, you gotta have multiple screens, or screen space in general. Like you can't just be flipping from chart to chart and trying to nail like the panic dip buy. Like just the other day when all of them started panicking all at once, it was so hard to focus, and you have one SMPW which isn't really bouncing, but at the same time you have like, again, AITX, OZSC, and a bunch of other ones panicking literally at the exact same time, and there's no way to really find the best one unless you have all those charts on your screen. And you really just, I mean, like laptop lifestyle is a thing, and like you can do it, but it really does make you more efficient, and it behooves you to have that kind of screen space to be able to watch the one that's more fluid, the one that's more efficient, and nail the one that actually feels right. It's not.
I think Dom has one screen. Dom has one screen behind us, but it's all like melded into one screen. So how does that count as one screen?
That's Randy Walker's.
Oh, Randy
That's
Walker.
Randy Walker's?
Yeah.
Not gonna swear. No. It definitely holds me back having a laptop sometimes, but again, my number one problem is over trading. So if I miss a play due to not seeing it, like ENZC or CBBT, I would rather that and not overtrade, because overtrading for me, I know, is my kryptonite. So everyone has to find their own strengths and weaknesses. Even though I missed some plays today, I still made, roughly 13 grand in the morning. So I would rather make the 13K and miss out on probably like another 10K, rather than if I had more screen time, then maybe I might take, like today I would have profited, but in other markets, I would probably overtrade. So it's not always, the answer is not always as obvious as you think. You have to find what works best for you. And every single person on this webinar is different. And I didn't realize this necessarily in the beginning of my teachings. Now I probably talk to more traders than anybody in the world. And, I've learned a lot from a lot of people. So really personalize this just because I like dip buys doesn't mean that you have to like them. I know some people, they're like, I know you like dip buys, but I like this. And like, they say it like an embarrassing way. And I'm like, no, like whatever works for you. I just want people to succeed. I want you to feel comfortable. I will come down on you though, if you take excessive risks and you're like, well, you say try anything. I don't think you should try going all in or using leverage. Anything that can risk blowing you up is not worth the risk in my mind. Another question, how have your exit strategies changed now versus a year ago? Good question.
I can take that one. A year ago, I only focused on my entry because I was always thinking about what's the lowest risk possible. And I had a lot tighter of risk levels. But now since I'm getting into swing trading and other stuff like that, I've been focusing more on my exits. And that really just comes down to seeing enough plays and knowing the correct expectations based on the Sykes sliding scale. Like everything goes into it. What time of day is it? Is there a catalyst? What pattern is it? What's my schedule and all that kind of stuff. And I just do that over and over again. And I've been working on trying to get better exits on my positions, especially in this market. A lot of things just go a lot higher than you think. So try to keep that. I try to keep that in the back of my mind and just do as best as I can. At the start, I was always focused on, I want the best entry, but now I want the best exit over the best entry, rather that is cutting at the correct level or selling at the correct price. And I care a little bit less about my entry. So it's just crazy how times change a little bit, because a year ago, I would say entry is the only thing that matters.
And how much money did you have in your accounts a year ago?
A year ago, I was probably 130, 140,000.
And now you're at what, 2 million plus?
In my accounts?
Yeah.
Probably over 3 million.
Not bad. Not bad. Anybody else want to take that question? How has your exit strategies changed in the past year?
I could take it.
Yeah, go for it.
Especially like if I'm short selling, like Sykes always used to talk about adapting to the current market conditions. And I remember when I first started short selling first red days, and that was the only pattern I would trade, my expectation for a first red day on like a truly extended stock was that, you short in the morning and you could potentially be in an all day fader and then even capitalize on a day two fade move. And now it seems like that's completely changed, and you have to be so much more like, you can still short sell. There's still some morning panics in the morning to take advantage of, but you have to be conservative, because if you overstay your welcome, then the stock can easily bounce back on you. And if anything, break out and go green, which is not what you used to see. So like in terms of like, for me personally, if I am short selling, which is very rare these days, I'm being conservative. I'm taking predictable gains. I'm not just like sitting there and like being like an idle duck in the pond about to get shot. I'm just making my money and moving on. And that's definitely a change in terms of my exits for short selling.
What if you're an idle duck in the pond just chilling and you're just like, yo, it's a nice day out, I'm going to go for a little swim? Why do you have to be a duck that's about to get shot? Is it because you're obsessed with gun culture like Dom and Bowen?
It feels like there's hunters out there that are coming after us shorts, just like,
that ducks shouldn't be afraid
to
swim in ponds. Ducks should, that's their home. Like, we shouldn't go into their ponds and be like, hey, I want to shoot you for my own sick pleasure.
You've lost me.
This analogy is getting out of hand here.
You said duck in a pond and you're like, I'm afraid of like the hunters. I'm just saying there's not hunters in all situations. There shouldn't be.
But in a lot of situations,
ducks shouldn't have to be afraid in their ponds. Just like children going to sleep at night shouldn't be afraid in their beds.
Ducks, kids in
Melvin
beds.
Capital is afraid of announcing any short position he's ever in ever again. So
short sellers should be afraid. Ducks in a pond. I'm sorry, you brought up a sore subject with me with hunting, just because I know that you guys love guns, and I don't think you need to. Another question right here. That's kind of tough. Position sizing. This is actually a really good point for the group here, because I like highlighting you guys because it shows like what hard work leads to over several years. But in the beginning, can you just talk about like what were your position sizes like at the start? Because obviously your position sizes have changed, with your account size. Most people watching this are just beginning, and I don't want them trying to like emulate like you guys and being like, oh, these guys are doing it, so let me do it. What were you like in the beginning to get you in the right process that got you here eventually?
I think it all depended, but in the beginning, when I just had I'd opened an E-Trade account with just a few $1,000s. And I was just taking like $500 to $1,000 positions, just kind of testing it out. But I had a lot more money in my bank account. Not a lot, but like an extra like 10,000 or something. And that's when I was just frankly just testing it out after I had moved from paper trading for a few months into just testing it out with E-Trade. And then eventually, as I got more comfortable, then I had 30,000 to start with for short selling. That didn't work. And then I put the 30,000 into E-Trade and learned going long, mainly from Dom, using a lot of Dom strategies. And anywhere in that time frame, I was using anywhere between $500 and $200 risk, 200 being on the best quality setup, and 50 being on like, okay, I think I could potentially be wrong here more than I could be right, but I still want to kind of test it out. And that's still what I do to this day. Like I always try to figure out in my head, like how good is this setup based on all the information and all the study material I've seen over all the years. And if it's just not a good setup, like I'm not going to risk a lot of money on it, like $50 just to try it out. And that was with like 30K starting capital. So very small portion of my account. The goal is always to stay in the game. Longevity matters. Like you really want that chance to get to this level, and to get to the stages we've all gotten to, like it all was really small beginnings and just focus on learning. Like the money, like Sykes says all the time, the money you make at the beginning literally doesn't matter at all, because it's all about the money that you make now. Like the same decisions that you make are like $50 or $100 decisions. Like those don't matter now. They're like 10 to 100x like different money decisions when you get here. Now it's a lot more important. So just do the best you can at learning, honestly. Like learning is number one most important thing when you first start, and just don't focus on the money, just focus on the process.
How quickly did you scale up? And this is a question for all you guys. Like, was it, if you go back into the beginning of your journey from obviously when you first started to like year one and then like year two, what were your position sizes growing that way? Was it like double after year one and then quadruple after year two, or you tell me?
My growth was quite slow because I was one of those traders that actually did not fund my accounts. I legitimately grew it from starting point to over PDT. And so when I was under PDT, I mean, I was risking 1%. So if I had, $20,000 account, I was risking 200. If it was $10,000 account, I was risking 100. And so, I've crossed a million yesterday, which was around 4.5 years. Like 2 of those years were just me getting over 30,000 or $25,000. So my growth was very slow, just following that 1% rule. As I got bigger over time and I got better at certain setups, I recognized there were certain setups, specifically the first OTC red day, where I could risk more than 1% and time it very correctly to where I could risk 2 or 3%. And that's what really exponentially grew towards the end of 20, or even some areas in 2019, but mostly early 2020, late 2020. In December 2020 was probably my best month doing that. That's why it was my best month. Not so much this month because it's been tougher shorting. But that's probably my, as I got experience, I found, and bigger account sizes, I was able to figure out where my niche was to really kind of pushing the envelope, but not too much to where, I still don't go all in. I still don't trade recklessly like that. So that was my progression.
I'll get to everybody else in a second. This just came out. Michael Good just posted the link. The SEC made a statement regarding market volatility. In case you didn't know, like when a stock starts to go supernova and like there's no news, this stock usually gets halted and they put out a PR, like Nokia put out a PR today saying, our stock is having unusual volatility. We're not aware of any news. The SEC literally just put out a statement on the entire market. So I've never seen this where they're saying that the market volatility is so much and they're like, we're monitoring it. Like, just in case you ever thought that like the Redditors or like the pumpers on like Discord and like Atlas, and they're like, oh, this is a normal market. It's not. They're lying. The SEC just put out a thing basically saying, we're monitoring this. All you like fraudsters out there, beware. That's what this statement is. So this is not a normal market. This is a bubble market. It's time to be aware. Let's get back to position sizing. Sorry to interrupt. Keep going.
So I personally seriously ruined myself from sizing up. The reason it's taking me so long to take massive size is because I was pretty quick to start growing my account, short selling, OTC stocks that have been running for 3 or 4 days. I was just capitalizing on those first red days, especially in the marijuana boom we had and the Bitcoin boom back in 2017, 2018. And all of a sudden I had this massive account and not a whole lot of practice with risk reward. And so I started sizing into things based off how I felt about them and not really with a good risk reward mindset behind me. And it scarred me because I took some really big losses right after I made my first 150K. I remember specifically NBEV, losing $25,000 on that, being all in because I felt so good about the setup. And once I had lost 25% of my account in 2 or 3 weeks, it blatantly scarred me for the next 3 or 4 years of my life, where I was just like, I was scared to size. And I knew that I didn't need to put $100,000, $200,000 in a stock to make money. Like, that is never necessary. Size is so overrated, and it's a privilege to have it and to use it, but you really have to understand how to use it and where and how to use it to your advantage. So it took me so long to just I had to go back. I had to go back to saying, hey, it's not about how much size I can put in a stock because I feel great about this. It's like, how can I control using minimal size and maximizing the most amount of opportunity that was there? And that was a 3-4 year process to dig myself out of that scared shell that I put myself in, where it was just like, oh my God, that was terrifying. How quickly you can lose so much money in the market just by a click of the button and being wrong as a novice. So it's taken me, my whole career to learn how to, use the size that I'm using today. And a lot of that reason that I wasn't able to size up at the beginning of this bubble in 2020 was because I scarred myself way in the beginning of my career just from using too much size. Take it slow.
If you make too much in the beginning, I know it sounds crazy because everyone's like, shut up, we should just try to make as much as we want. But if you truly learn the process, and like I said, get out of the PDT the right way, earning a small amount and building it up and scaling up, you trust the process, you trust yourself, you have a guide, it's not too scary. It's no different than, there was a good Disney movie where it was Rookie of the Year and the kid slipped on the ball and I don't know if you remember this, he had an arm and he went straight to the major leagues because he was amazing. But then he was in the major leagues and there was all these new, obstacles and he just wasn't ready to be in the major leagues. If you watch that do you guys know that old Disney movie? You're probably not even old enough to remember it. Did any of you see that?
No,
I
I
don't
remember it.
Sounds pretty good though.
You think that because all he wanted to do was be in the major leagues, but he wasn't ready, right? And then actually, a little spoiler, he slipped on a ball and he has this crazy fastball, but then he slips again and he loses it while he's in the playoffs and he has to float it, and then he finds out his mom was a real pitcher. Anyways, long story short, he wasn't ready for the major leagues, okay? You cannot be ready for the major leagues too soon. Even though you want it, you should go up stage by stage to be better prepared, more grateful, more structured. Otherwise, you get too big too quick, like Huddie said. And it's such a weird lesson to learn. What do you mean you shouldn't try to make as much money as you can? Rookie of the Year, that's what it was called. Did I say it was called Major League? Major League is with Wesley Snipes and Charlie Sheen. Different movie.
And it's funny. I remember taking that big loss on NBEV, and to this day, I remember the first person I talked to was Jack, because we were trading together back in the day, and we were talking to each other, and I was just man, whoa, and he was just starting out, and it's crazy to see the growth.
When you take too much size, it's still scary. Even for me, I'm trying to get executed. I'm putting in some orders. Sometimes I do the math wrong in my head and I'm like, whoa, that was too much. On AITX today, I took too much size. It was dead on with AITX. I nailed the bottom. I executed it well with the double bottom, but I took too much size. And then when it started bouncing a little bit, I got freaked out with my size and sold too soon. So I kind of screwed myself going too big because I wasn't prepared. I did the math wrong in my head. What do you guys think? Dom, what do you think about position sizing in the beginning versus year 1, year 2, year 3? What year are you in now? Year 4? I don't even know.
I think it's year 5.
Okay.
I didn't start sizing up until, like I said, Thanksgiving of last year. So I started with $200 risk. And everything I do is just dollar risk. So where my entry is and where the risk level is, the difference between that decides how many shares I take. I think that's a good lesson for beginners, a good place to start, because you always know what you're going to lose. And I always think pick a number that you're okay losing. Like I used to put like $200 on my desk in front of me. So I'm like, this is what I'm risking per trade. I'm okay with losing this. And then going through my journey, my 10 months of unprofitability, I was just, chopping around, and I was making basically 1-to-1, but I had, less than a 50% win percentage. So I was losing money slowly. And so I figured out it wasn't my risk I was screwing up on. It was the execution of the plan and making more money on my winners. So once I figured out the nuances of the pattern and I was able to make 3, 4, 5-to-1 on my winners, I just felt really comfortable with the $200 number, because then I could make 2 or 3 grand risking $200 on the way I trade these stocks. So I was so comfortable, I didn't even realize it until last year that it kind of hit me like I need to start practicing sizing up. I do think it's like something you need to earn, like to start wielding size, like, because if you do it too soon, like Huddie said, it can be like really detrimental. And I was always conservative from the start. I was really afraid to blow up. Like it wasn't my money when I first started, and I could not blow it up because I wouldn't have had any more. So I kind of was afraid to take any big losses, and I kind of just got in the habit of always cutting my losses and always risking $200. That stuck with me for a while. Now I'm kind of more not loosey-goosey, but I have an idea of what I'm trying to risk, and I just kind of think what number would make me upset if I lost it, and I just go to that number for size. And because we're kind of all in the zone right now, you're right so much more often than you're wrong that you end up making a lot more by taking a little extra size. But we're also at a point now, like you said, we've earned it with bigger accounts and stuff, that we could take a little bit of a bigger loss every now and then. But I just think it takes time to size up, and it's not something you should force.
And also, I want to throw out, the other thing, that not all years are created equal. Like, every single person on the Zoom has been in this game for 3, 4, 5, 6 years, 20 years. This is the market that we've been waiting for, because there's so many opportunities, and all those years of slower markets, all that prep work has gotten us ready for this market. Most people, if you're just beginning, or maybe even if you're a year in, there's so many plays, maybe you're trying to force it and maybe you're getting a little lucky. Maybe you're scared to force it because it's overwhelming. You have to recognize where you are in your own path and where the market's path is. There's 2 moving targets: what works best for you and what works best in the market. And in an ideal world, which is what's happening for all of us, we're fully prepared and we have a hot market. So that's why you see everyone, making record gains. It's not a total, coincidence. But if you're just starting, you don't have that opportunity yet. So all you can do is maximize this market by learning. Maybe this year, if this crazy market continues, maybe 2021, the amount of opportunities will, in the future count as like 2 or 3 years worth of opportunities in a slower market. So you can really speed up your education right now, not necessarily your profit curve. You got your knowledge account and your trading account. Okay. This is the time to grow your knowledge account as much as possible, so then you can be ready to grow your trading account. I mean, Matt Monaco just started sizing up, and I mean, it's gotten crazy for you, right?
Yeah, it's been pretty crazy. Like how I started was, my first account was $2,000 back in 2017.
Way back in 2017.
Yeah. And I lost like half of it. I basically blew it up. So then I stopped trading for a little bit to study. I got some freelance jobs to like refund my account and actually put some decent money in there. And then I was able to fund my account basically over to 25K, just from working other jobs outside of trading. But during that whole time, when I was trading, my risk was super small, even as I was building that account, because my goal always was just to get to PDT. And that was just my first milestone. That's what I wanted to get to. And then come 2020, and everyone's working remotely, schools, I was still in college, and college was remotely. I was trading full time. My risk level at that point was $100, $200 a trade. And just that first COVID bubble run into June, I started sizing up because the plays were just so good. But even at that point, my highest risk through mid 2020 was maybe $500 a trade at total. And then we slowed down for a bit. And right now, like I'm at the point like if I'm not willing to risk like $1,000 on a trade, like I don't even want to take the trade. And that's just because there's so many plays out there. Like if it's just not worth my time, like I don't want to put the trade on. So like that's kind of the gauge I'm using, where like the most I'm willing to risk is like 2 to 3,000 on like a best of the best setup. Because again, it's just madness out there.
But you've sized up dramatically in the past few weeks.
Oh, for sure. But like I mean, so like the last couple of weeks I've been risking like about 2,000 to 3,000 trade on average, I'd say. But it's just there's been so many of those, and if I'm risking like $2,000 on a trade, I can, if it works out, like I'll make 5 times my risk, so I'll make 10 grand on the trade. And there's been like 3 of those trades a day for the last month. It's been crazy. There's losers in there, don't get me wrong, and I'll lose, but like I'll lose twice and win twice. And max size, I mean, that's still like $15,000 profit, which is crazy to even say out loud. So
cool. No, I mean, you guys are on the right path. I mean, it's pretty cool. I just wanted to go through everybody. One tip for someone in their first, let's say 6 months in this crazy market, trying to adjust to being overwhelmed, trying to learn. If you could go back in time, like let's say like you were right now and you have the knowledge you have now, but you were just starting somehow in this hypothetical example, what would you tell people in their first 6 months of studying or learning?
I would say, so like my start was in 2017, which was like the Bitcoin bubble. And I saw Roland, and even though I basically blew up my account during that time period, I was trying to learn as much as I can. And again, I lost money, but I learned that like the stock market is highly profitable. You can make a ton of money. I saw other traders do it, so I used it as inspiration.
How much did you lose, just to be clear?
Like $1,200 or whatever, which was a little over 50-60% of my account back then. So like that's when I got the bug. And I was like, man, like this is awesome. Like I'm gonna figure out how to do this. And it took a couple years. Like it took me 3 years before I actually started to make money. So learn as much as you can, and like it's okay to make mistakes. Keep them small, trade small. Because like if it takes you 2 or 3 years, like there will be another hot market after this one comes to an end. And like it's a long-term game. Sykes says it all the time. And it truly is. Like you can't go in your first week, your first month, your first 6 months and expect to be making thousands of dollars a day. That's just not how anything in life works.
I would say your first 6 months to a year, maybe even the first 18 months, your goal is not to make money. Your goal is to survive. I almost think not enough people are aware that there's a learning curve to this. And like, yeah, you say a learning curve, no one really knows what that means or is. And it's like, you quite literally have to accumulate enough experience and enough lessons to then even understand even close of what you're trying to do and trying to accomplish on a very deep, level of the markets. So like Huddie said, like thankfully, even though it sucked that Huddie lost as much as he did when he did, but if he had done that earlier when he didn't even have that much money, I know I've heard plenty of stories of traders do that before they're even profitable and they don't come back. They're so scarred because they haven't even made money ever. So then they take a huge loss and they're done. Like they're any hopes of them being a profitable trader is gone. Not only maybe mentally, but just like emotionally. Like they're so scared. So thankfully, even though it sucks that it happened to Huddie, at least Huddie was profitable enough to trust and believe in himself where he was at, and then just get back to where he was now. So the last thing you want to do is have that emotional scarring loss, detrimental loss in the beginning. So no going all in, small position sizes. Like I traded 100 share position sizes for the first like 5 or 6 months. You got to stay in the game and you got to protect what you have.
Dom?
I would specialize your focus at the beginning. Like I feel like the first few months can be kind of wasted if you're just looking around, bouncing around from pattern to pattern to pattern, and you're not really getting any traction with any particular idea. if you start and you like watch like the basic DVDs and stuff, and then kind of see which direction you want to go in, and then focus on 1 or 2 patterns max, and really like get to the bottom of those and figure out how those should be traded. You can, oh my God, you
What are you
can
watching? What are you watching?
CHS. But if you can figure out one pattern, you can spend that first 6 months actually growing your account, versus kind of chopping around and learning a bunch of different patterns. And that's kind of something I didn't do very well. I kind of tried to learn like 10 patterns at once, and that doesn't really work. So if you start by focusing on like one pattern and learn it inside and out, that should only take you a few weeks to do that. And then you can start growing your account while you learn that one, master it, and then move on to the next one, and kind of take a step-by-step approach versus like trying to soak in everything at once.
Jack, what do you think?
So the question is, what would I tell myself for the first 6 months?
Yeah, tell somebody who's like starting in the first 6 months or a year.
Honestly, like, I don't know if mine will sound cheesy or anything, but it's just literally work as hard as you can. I think that's like the most important thing. Like, put your priorities straight. Like, if you really want to make it in this game, like, you got to put 110% effort in every single day. 90%, 95% traders lose. So if you're letting that 5 to 10% outwork you, like, you're just going to be another statistic of that 90%. So like, I'm just a big believer in sacrificing it all, especially if you don't have a lot of commitments, not like sacrificing all your money and just going for it. I'm talking about the time commitment and the, frustration. Like, even if you're being frustrated and you don't understand something, like, a lot of people just be like, oh, I'm going to walk away and go do something else because this isn't fun. Like, this pain isn't fun. I'm going to go walk away and do something else. But I remember, like, when I first passed like 100 grand, one thing that I said was like, embrace the grind. And I'm still a believer in that. Like, you really need to make this your life, especially in this market. Like, there's just so much to learn every single day. So work your hardest. And that is my advice.
No, I like that. And we have a good question from Sniper Jake. He says, what is life like as a trader? Are you happy? Do you find that you're able to detach your life and enjoy apart from stocks? You want to take that, Jack?
I would say, I mean, I'm not really like happy right now. I'm not able to detach myself from stocks. But that's just, I'm okay with it because I'm self-aware of what I'm doing to myself. And it's not like I plan on living the rest of my life like this, but I know that I'm 22 years old. I know we've seen the best market in decades, so I'm willing to sacrifice my happiness right now for the market. Like, I'll say it, like, I'm literally pretty much a slave to the market. Like, this thing gets me up and puts me to bed at night every single day. And that's just how it is right now. And I know eventually, as the road goes down, like, I'll eventually start to detach, and I trust myself to eventually get to that level. But for right now, it's like, I really just want to see how far I can take it. And that's it. I mean,
Tom, are you happy?
Yeah, I'm really happy. I mean, for me, the goal of trading was always to
Even
get
though
to a
Oregon
point.
got destroyed?
Yeah, I'm okay with that. It wasn't a real year. Yeah, the whole goal for me had always been freedom. I wanted a job where it didn't feel like a job, where I was passionate about it and I had the ability to do whatever I wanted. And this is the first year I kind of started to take advantage of that. Joined a country club, bought a boat.
215 on NAKD. Just on a little alert.
And I just started living my life this year, and I was okay with missing plays. Like, all summer, I golfed pretty much every day. I was okay working 9 to 11. And of course, I missed setups all the time. I'd see Monaco post in chat like, oh, up 20 grand or whatever. And I'd be like, crap, I missed that, or something big panicked. And I was like, oh no. But I kind of realized, this is my job and it's not who I am. So if I can succeed and, do really well and enjoy life and do what I want to do, then that's good enough for me. And that's why I got into it. And of course, I've been taking it a lot more serious right now. And this has been a lot of fun just because it's been crazy. And I've been working like 9 hours a day. But when it's in a normal market, I'm okay missing stuff and just living life. So yes, I'm happy.
Kyle, are you happy?
Yes. I like what Jack said, or what everyone's saying, because it's really a matter of what works for you in balance. And I don't say balance. I don't say, people think of balance, think of 50-50. And that's just not the case. I think you got to put way more work than you think into trading to make it happen. But once you get over that hump and get over that experience and find what works for you, you can then start to pick and choose how much you want the market to be in your life. So for me, I've got I really enjoy how I have it. I treat it like a job every Monday through Friday. But then, and a lot of traders say like, oh, I hate the weekends. Like, I wish I could just trade. I actually love the weekends, because that's like literally when I stop thinking about it for at least a day, at least 24-hour period. I do review my trades Saturday morning, but once that's over with, I mean, from that on to like Sunday night, I just do whatever I want to do. And it's usually not any of their close market related. That's like a huge way for me to like de-stress and like just reset. So yeah, I'm very happy with how much time I'm putting in, and what the outcome. And of course, if I was ever upset or unhappy with how I'm performing trading wise, I would put more work in. It's a constant measurement of how satisfactory I feel and how much time I want to put in. But right now I feel very happy with what I'm doing.
Huddie, are you happy?
God, it's just the best job ever. Like, quote unquote, from the movie Fury. You choose your hours, you choose how much dedication you want to put in, you choose when you want to go on vacation. You're not, like, I guess like the stock market may or may not be your boss based off what Jack and Kyle said. But it's the most freedom you can have. And the amount of money that you can make is just astronomical. That I just think it's the best job ever. You're so free, you're so agile, you can do whatever you want. Just you got to make sure you get to where you have to get first, but it's really cool. The other thing I would say, like, I didn't get to give my advice to the people that are just starting out. The thing that I would tell myself in the first 6 months is watch Trading Tickers, watch How to Make Millions, and watch the Penny Stocking Framework. Watch those 3 DVDs like they're your Bible, like they're your textbook. And honestly, it took me like a year to watch Trading Tickers, and that was a big mistake. So watch those DVDs.
Trading Tickers 2 is coming out soon. Oh, 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 oh. I'm excited. Matt, are you happy?
Yeah, definitely happy. I mean, like, honestly, it's kind of just surreal. Like, nothing has really set in. It happened so fast for me. Like, November was my biggest month, and then December I doubled it, and then this month I basically doubled December. Like,
how much you up in January right now?
Probably like 325, 330.
Say the full number out loud so that people.
I haven't done the math between all my accounts, but yeah.
No, say the full number. Don't say 325.
Yeah, it's like 330,000 in January.
Dollars,
$330,000.
Good to speak in complete sentences.
So yeah, like, it feels surreal. My life hasn't like changed. I haven't done anything crazy. Like, I'm super happy. And like, the goal, when you started and you got some momentum, the goal is always $1 million. And I mean, like, we hit that goal, but now it's like, what's next? And every day the market's just madness, and who knows? Like, I'm riding the wave, and we're gonna ride it for as long as it lets me. And then I don't know, maybe go to like Fiji or something.
Yeah, no, I mean, I like that. I still have yet to go to Fiji either, although that's a tough time zone. So we'll go when the market's slower. One person in this group was trying to do a snowboarding trip, and I put the kibosh on that during this madness, because that's just irresponsible to waste, so many opportunities in order to go play in the snow. Like, go play in the snow when there's no opportunities.
Who would try to actually, in this group, like, who would actually try to arrange a group like a trip like that? I don't know.
Somebody who doesn't appreciate the, how fruitful this market is. Someone who takes opportunities for granted.
Someone with like really uncut hair and like something like that.
Salmon suit.
Someone who just needs to be reminded of how many opportunities there are. There's nothing wrong with anybody's hair. It's just, a mindset of gratitude versus attitude. So you choose. Do you want to have an attitude or do you want to be full of gratitude? Doesn't matter to me, but it does matter to everybody else. The point is that when people ask, like, are you happy? Like you're a slave to the job. Like what you have to understand, again, no 2 years are equal. No two markets are exact. When there's a lot of plays, you maximize it. Too many people watching this webinar are unable to maximize it because they did not start learning 3, 4, 5 years ago like they probably should have. You can't go back in time. I wish you could. I would take everybody back in time so they can learn how to trade a slow market and then fully appreciate this, ridiculously hot market. But if you're just beginning right now, you cannot go back there. So all you can do is start today. Right now, as you watch this, start to recognize this is the time to maximize your education. So that when there is, maybe if this bubble market lasts a year, maybe you'll be better prepared later in 2021. Maybe if this bubble market goes into 2022, you'll be prepared then. Maybe this market slows down and sell in May and go away kind of fulfills, its historical promise. Like maybe this is all over in April or May. And then at least if you have the right mindset and you capitalize on learning every single day right now, okay, the market slows down in May. We all go to Europe for this summer. Maybe, the vaccine works and everyone's chill. And then you get to have fun later on. Get the money, get the freedom so then you can have fun. The process of getting rich is not fun, right? Like, it's not like, oh, I'm working so hard. I'm working 18 hours a day. I love it. Except for Jack, because that's crazy. That's him. That's cool. If you love grinding, if you love slaving away, that's fantastic. But I will say that Jack and I sat down for a 3.5-hour interview. It'll soon be on my YouTube channel. You'll see his struggles. And he's always been grinding. And you will never look at a pillow the same way again. I promise you that once you understand Jack's story about pillows. I have nightmares looking at my pillows after sitting down with him for 3.5 hours. So you cannot just say, oh, are you happy? Can you detach? Like, start to recognize that this is a grind, but this is the opportune time to learn. And I have to stress that so that you don't miss out on this opportunity. If this were a slow market, I would not be so amped. If this were a slow market, I would not be on a Zoom call, with 5 new millionaires who all passed basically $1 million in the past 3 or 4 months. Like, just think about that, okay? If we were doing this back in, January 27, 2019, what were you guys at? What was your account size, each of you? Let's try to remember, what were you at last January? Now, Jack's at 3 million, Dom's at around 1 million, Kyle's at 1 million, Huddie's at 1 million, Matt's at 1 million. What were you a year ago today, roughly?
I was at 250,000.
You were ahead of the group.
Like 130, 150, somewhere around there.
I was at 200K.
I started 2020 with 110,000.
Matt?
And I was roughly 28, I think, 28,000 total.
The point is that whether you have 28,000, 100,000, 200,000, it's not enough to retire on. It's not enough to live on, but it's a starting stake. And even in 2020, at the beginning, all of you guys had a little money, but more importantly, you also all had a little education. And that little starting stake, whether it was 20,000, 100,000, or 200,000, I know that sounds like a lot to most people. It all doesn't matter. Now you're making that. Every single one of you is making the equivalent of what you had back then, now in a few days. Think about that, okay? Just seriously think about that. Huddie messaged me, he's like 100K now in 3 days. That's, okay, you started out a little higher, but still, you basically made all of what you had in 3 days. Matt, you're up 300,000 this month. That's 10 times what you had all to yourself last year. Okay, like when you have that preparation, when you have that starting stake and there's opportunity, things get crazy. Like the exponential possibilities are crazy. And this is what a lot of people don't understand. When I first got started teaching penny stocks, they're like, why would you do that? They thought that I had some special talent. I was either maybe a fraud or I was lucky. And I was like, no, I've just been in hot markets before. I want more people to be in hot markets. And again, it was a struggle. I mean, the first few years that I had this millionaire challenge, the people were like mocking me the first 2 years. They're like, you don't have any millionaires. You're millionaire challenged. Ha, 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 ha. And I was like, shut up, man. It takes a while. Like, now everything, I can't even keep up with how many people are crossing a million, and we have more students crossing 500,000 and 300,000. It takes time. But this is the time to push it. And every single person watching this, I hope that the one thing that you can get out of this, there's a lot of great lessons being shared, but I want you to understand that this is the time. Every single day counts right now. So get your sleep. Don't worry if you're happy. Go to a therapist later when the market is slow. Don't worry about that stuff later on. Be as unhappy as possible. Eat a lot like I did. Matt and I pounded some flan last night. It was delicious. And we had churros. That's what makes us happy. Matt's gained a lot of weight ever since I've been in town. So what? So we eat our problems away. So what? While we eat at night, we trade during the day, and we maximize every single day. That's healthy. Even though eating that much flan in the long run is not healthy, beware of that. I really want people to understand this. Look at this. The chat room's going crazy. Everyone's watching NAKD. Apparently, this one just keeps running. Let me see.
It's approaching $3.
DTRM keeps going. NAKD keeps going. GNUS is bouncing a little too.
Silly.
What? Look at that
NAKD
chest hair
is
shot.
silly.
What is that chest hair shot? Why is that? It's such a chest hair shot of Jack. I hope everyone saw it. Look at his face get all red. Look at his face get all red, Mr. Chest Hair. From here on forward, you will be known as Chest Hair Jack. Where's the
Match
chest?
the beard, huh?
Wait,
I didn't
where's
take the chain off because I showered. Oh man.
Oh, you gotta go put it on.
I'm offended. The point is that every single second, every single minute, every single hour, every single day counts to maximizing your education. Final thoughts. I want to answer some questions without these guys. These guys are tired. Thank you even for joining me. But let's go around the room. One final thought from everybody for the group of challenge students watching this. Dom's first.
Stick
Age before
with it.
beauty.
What?
I said age before beauty. I think you're the oldest out of everybody here. You're like 25,
Hey.
right?
Oh, how do you are?
Huddie doesn't
Okay.
count. He's like, he's not even human. He's like Pauly Shore and Encino Man. Not Pauly Shore, Brendan Fraser.
I would just say, like we always say, it's a marathon, not a sprint. Stay the course, because most of us here, it took over like 3 years. Besides Matt, well, I guess you've been in it for a while, but once you did it, was so fast. But like to actually hit any big milestone and just kind of, I don't know that it's not going to be easy, because like there's a lot of ups and downs. Like you said, different markets, different years. You might have an amazing year and then next year struggle to, stay profitable for a few months stretch. And, you're never going to be able to stop working on the game, because, there's moments like this where the market's so good and we're just kind of gliding through it. But then it might get tough again, and we're going to have to reevaluate, do more things, spend more time on it, like get new patterns, revamp our patterns. And it's forever going to be a challenge. We're never going to master it. So stay the course, because, it's going to get easier, but it might get harder before it gets easier, and then it might happen again. So it's a long, long game. So if you're in it for the long haul, just stay with it.
Good points. I like it. Jack, final thoughts.
Final thoughts. I don't know. I have a lot of thoughts, honestly.
Share 2 or 3. You've earned it. You've made 3 million. All these other guys have only made $1 million. You get 3 final thoughts.
Maximize every single day, whether it's learning or if you're already profitable, try to maximize your patterns. Don't compare yourself to others. Compare yourself to yourself. How are you doing on your journey? It doesn't matter who Jimbo on Twitter is doing, how much he's making, or all these people who are making, 1,000%, making millions and all this stuff. Doesn't matter. How are you doing on your journey? And tip number 3 is just stay humble, be appreciative of every single opportunity that we're getting right now, because it all could, stop tomorrow. All the momentum could go away. So just be grateful for everything. Those are my 3 tips.
Especially with the SEC statement, there will be some, halts. I don't know what's going to happen, but they're signaling, they're trying to warn people away from just, holding and hoping. So be careful.
And then KD's at like 3:30.
What?
I have my shares back.
Remember when we bought the dip at 66, Mono?
I remember.
Remember when I bought the breakout at $1?
Remember when I didn't trade it at all and have no guilt whatsoever? Kyle, final thought.
My first one would have been the surviving one, but I already said that. I would say the second thing, well, I guess the second thing I already said too, but it's I guess we're here because we've kept what we've made. Everyone can make money, and plenty of people do, but not everyone keeps it. So that comes down to risk management, understanding, this market we're in, like, that doesn't last. Which is why, like I said before, why I'm conflicted about how everything's moving and how all these retail traders are making money is great. Who keeps it is what matters. So.
And just to go on with that before Huddie speaks in a second, I made a lot of money back in the year 2000 in the first 4 months, 700,000 roughly. Then the NASDAQ crashed. There were no more OTC breakouts. I didn't know short selling. The last 8 months of the year, I lost 10 grand. I don't know if that's going to happen this time. For all we know, this market can keep going, but it can end. And I don't want anyone to think like, oh, there's always going to be opportunities. I'll take, a week off now and just come back next week. That might be fine, or it might not. I don't want you to, ignore lessons of the past where I can try to say, look, I've seen a bubble market before, and I wish that I had taken it more seriously at the time. I want you, every single one of you, taking this market very seriously, not necessarily in terms of how much money you can make, but in terms of how many lessons. That is my main thesis right now. Every single day, there are so many lessons. These guys were in NAKD, they're learning. So don't think like, oh, just because they crossed 1 million, they're perfect. They all sold NAKD way too early. That's a good lesson. Now when a similar kind of NAKD pattern pops up, maybe tomorrow or the next day, they'll say, I remember I sold NAKD too early. Let me adjust and try to do better. So any missed trade is not the end of the world like newbies think. It's not something to get angry over. It's to use as an example to do better on in the future. Huddie, go.
You got to get in where you fit in, and you got to make some memories. I think those are my thoughts right now, especially in this market. Find the patterns that work for you and maximize as much as you can. It takes a little bit of experience, but it's possible. I feel like everyone else said everything that was on my mind.
How old are you, by the way, for the record?
26.
So just everyone watching this, understand these guys are like 22, 23, 24, 25, 26. That doesn't mean that if you're in your 30s, 40s, or 50s, it's like a young man's game. We're still waiting for, my first female millionaire student. Jack's girlfriend, Mariana, is crushing it. She's over 300 grand. We have a few more upcoming female students. It doesn't matter how old you are. I'm just very proud of the fact that, these young guys are taking advantage of their education so early in life. So they'll have these lessons, they'll have their experience. So by the time they're in their 30s or 40s, it's going to be like next level. However old you are watching this, I have some students who are in their 70s. Fantastic. Maybe your children, your grandchildren don't visit you enough. Obviously, it's a tough time in the world right now. Why don't you make some money? Be a hip grandpa and be like, yo, grandpa's got the cash. Now your kids want to visit you more when it's safe, right? And then it's like, oh, rich grandpa or grandma, right? Think about that. Why not, try to make some money that way? Don't just sell stuff on Etsy in a non-scalable business. Trading is more scalable. Matt, go.
I got 2 short ones. The best time to start is just today, and you'll thank your future self later. And then the other one that I honestly credit a lot of my success to is the quote that you're the average of the 5 people you hang out with the most. And I mean, I'm with 5 incredible people right here. And it's a huge reason why I'm so successful. I've taken everything from everyone on this call and I just kind of put it all together. So yeah, level up your friend group. If your friend group isn't into working hard, like, I mean, it sucks, but
Get you.
yeah, if this is what you want, like, those are just sacrifices you need to make.
Look at this. Jack is literally trading. He just shorted, what was it? What did you short? NAKD?
NAKD.
You short that too, Kyle?
I was watching. I was like, I would take some right here, but I'm talking right now.
Jack is multitasking. That's what it's about. That's what Arnold would do. Look at the poster behind Jack's head. Arnold multitasks. He gives Zoom calls while he short sells, and he pumps iron in the forest while drinking.
I just made.
I'm like running back and selling CHS right now.
That's cool. These guys, you know, look at the detachment, right? The market's closed. Look how detached they are. Not. They're taking advantage of every opportunity. And that's how you should be. Whether you're giving a Zoom call or not, you know, you're always multitasking. And that's cool. Working is cool. Making money is cool. Learning is cool. So like going what Matt said, you know, if you have people who are unmotivated, like I am so quick to just block people on Twitter. I'm like, I don't want you wasting another second of my time with your negativity, your toxicity, your ignorance, and your laziness. You're out. You're out. I have zero patience. I have zero tolerance because there's too many good people with good attitudes, too many good trading setups, too many good lessons. Focus on the good right now. Maybe when, again, markets are boring, you can, you know, have fun and be friends with lazy people. But right now, nothing should distract you. No snowboarding trips, Huddie. Not right now. Snowboard later on.
You canceled it.
Fantastic. Work hard. Thank you guys for joining in. I'm going to continue answering questions. Get some sleep. Trade some more after hours if you're an addict. Do whatever you want. Jack, put on your chain. I don't like seeing you without that chain on.
I
think
gotta
that
put
is
it on. I made a big mistake today. That just shows how I just only thinking about the market. Can't even remember to put my chain on.
Put the chain on. It's good luck. Dom, thank you for joining. Kyle, thank you for joining. Matt, congratulations on passing $1 million today. Huddie, I'm looking forward to seeing your exact dollar amount, and whenever you shave, get cleaned up.
Box I bought for it.
What is that? Ooh, look at that.
Wow.
Nice. Congrats.
LED light on it. I like it.
No, seriously. Thank you guys for sharing. These guys don't have to share or understand. Like, this is why I'm so grateful for this community. People sharing their lessons, and it all helps everybody. And again, the more traders, the better in this niche. Don't follow anybody's alerts. Understand most traders lose. The whole goal is creating self-sufficiency, learning from those of us who have become profitable, taking a little bit from every single trader, finding your own path. That's, I think, the best thing that you can do. Thank you guys again. I'll see you guys in chat. Everyone on the challenge webinar, I'm going to continue answering some questions, but these guys have had a long day, so I'm going to let them go.
All right.
Thank you.
Thanks for having me on, boys.
That's welcome.
Thank you very much.
Hi, guys.